joining us. Well, Escorts, what a comeback it's been for the rural economy. From a brink of concern to a crunch, now the rural economy is flourishing. If tractor sales are an indicator of what the health of the economy is, well, guess what? The health of the rural economy is in excellent shape. But is this as good as it gets? Is this pent-up demand which is coming back, or now the new agri reforms and other factors which are at play like low interest rates have really changed the fortune of the entire tractor industry? Bharat Madan joins us now to walk us through what lies ahead for Escorts and for the industry. Bharat, it's never been this kind of solid going for the tractor industry. So let's start our today's interaction with a zing in the voice. Are the trends sustainable?
Yeah, I think it looks like. So the demand on the ground obviously continues to be lower. So the retails have been quite good. So obviously we think the demand is continuing, and for going forward. I think as of now, if you look at all factors on the rural side, they all look positive. So whether it's on the Rabi harvest which we had, the very good kharif sowing, the expected kharif harvest which will be there, the next Rabi crop which is coming up, the monsoon has been pretty good, MSPs have been increased, food procurement has been pretty good by the government. So it looks like next 2-3 seasons should be good for the industry.
Where is the demand coming from? Is this largely because of lower interest rates or the new agri reforms which have kicked in? What we are trying to understand, Mr. Madan, is that monsoons have been good for last 2 or 3 years. But why this year things have changed so much? What is the real catalyst according to you?
So I think it's a combination of factors. So monsoon, like you said, obviously has been good last year also. So last year after the monsoon only we actually started seeing the demand picking up. Before that the market was down. So if you look at the first 6 months of last fiscal, they were pretty bad. The industry has actually gone down. The winter rains the year before were not very good. So actually the pickup started happening only from last year. And then there are a combination of other factors which also come into play. The government push from the agriculture reforms, and the extensive buying they did during the lockdown period, the record harvest which the Rabi crop had last time. So I think all these factors are adding up to very good purchasing power in the hands of the farmer, which is, I think, what is driving demand right now.
Okay. On the supply side, Mr. Madan, are there still challenges? Are you looking to ramp up output to keep up with the demand?
Yes, we had challenges even in the last quarter till middle of last quarter. Actually, we were still struggling to get the supplies, especially from some of the suppliers who got impacted with this lockdown. But after that, then obviously things have stabilized, and today we are running almost at a peak capacity, or actually beyond the capacity also. So we are stretching ourselves to the extent we can. And we think the position, I think, will continue on the supply side till maybe it is mid of this month. So after that, really the things will start easing out and the festive season is over. So that will give enough time to manufacturers like us to start building up inventory both at the over and at channel. And today the inventory levels are virtually depleted.
Okay. We've seen a slight market share drop, down 144 basis points year on year and 92 Q and Q. Which segments or categories are responsible for it, and what's the strategy there then to recover that?
So if you look at the trend also, I think where we are gaining market share has come only in the higher HP segment. In fact, last quarter, so I think 2/3 of our sale actually came from the higher than 40 HP segment, which is also happens to be a good margin segment industry contribution for the industry. So we lost some of the sale in the lower end, and that's again a trend which I think is coming because there's a lot of focus was more on the agriculture side, and the demand from the haulage side actually has been low in these months. So as you see, the infra also starts picking up. So that's the demand really which will also start swinging towards the lower end of the tractor segment. And really that will also start growing. So our concerns have been more from the supply side, which we are not trying to fix. We are also trying to ramp up capacity both internally as well as with the suppliers. And we hope, I think, by next 6 to 9 months, we should be able to ramp it up to a significant level. And by next fiscal, we also expect our production in the JV with Kubota will also start. So that will also add another 30,000 capacity to our overall available capacity. So capacity-wise, I think we should be good, I think, in the next fiscal. And I think next 6 months, we'll try to make up whatever, I think, shortfall we had seen in the market share in the first 6 months.
Right. Mr. Madan, what the street is really taking heart from is the outlook that you've set out for the entire tractor industry. And you're saying that it's positive, a low single digit or low teens rather, growth guidance is what you've actually projected. What could be, however, the challenges to this projection going forward? Or are you confident that low double digits is what the industry per se would be able to achieve?
See, the only challenge is obviously the situation around the COVID-19. Now, how this really pans out, you see in the second wave happening in the markets like US and Europe. So whether India also comes to that and what happens in those winter months, especially in the northern and central India, which really get more impacted because of this. So that's, I think, the only uncertainty which we are not sure right now. But barring that, I think if you look at the retail side on the festive period has been quite good. So which makes your entire channel inventory totally depleted. So I think the next few months, definitely the industry will like to fill the inventory, so that in any case will drive the wholesale growth for the company. So that's why I think for this year we look, I think, quite now optimistic that we've seen in the first 6 months the industry has gone 12%. So maintaining that sort of trend looks like possible in the balance 6 months too, given the current situation where we are in.
Given the net cash on your balance sheet and the strong cash generation as well, Mr. Madan, what exactly is the plan? Is it an acquisition that you're going to be targeting? What is it that you're going to be doing with the cash, or would it lead to higher dividend generation for shareholders?
I think we'll look at all the opportunities. Obviously, the first priority is the business should grow. So I think all segments where we are present, we'll definitely look for options so we can do better, especially in the railway segment. We are quite keen, but that is one segment which we think has a lot of potential to grow, looking at the planning stage also from the government side, the kind of spend they are indicating for this segment. So that will be definitely one area of interest to us. And on the farm equipment side, again, there are investment areas which we are now working with Kubota, our JV partner, which ways some of the investment will happen. So obviously from the business perspective, the capital allocation will first go to the business which can generate healthy returns. So that will be the first priority. And yes, going forward, if definitely the cash flows are continuing to be strong, definitely there will be a good return for the shareholders too.
Okay, on that happy note, Mr. Madan, we'll let you go. Great speaking with you, and congratulations once again for a fabulous set of earnings.
Thank you.
Escorts holding up quite smartly, reacting to its numbers. In fact, the kind of visibility that Escorts has given actually for the entire tractor industry, saying that low double digits or early teens is what they'll be able to clock, or what they foresee the entire tractor industry to clock, is actually spelling very well for even M&M. So let's bring up both these stocks and show you how they're performing. Escorts, though, has been a little bit choppy, now settling lower by about 0.5% or so. M&M is the other one.